Hello, fellow traders. 'Tis I, the Rumpled One. You're probably going to think I'm beating a dead horse with today's topic, but I have to. Time frames are just data compression. I'm talking about this because I get Black Swan Capital currency currents in my email just about every day. And they had this article today called A Framework for Trading Currencies. Caught my attention. I like that. And something that I really liked is they start off here and they say, the bottom line is, if something works for you, use it. It is not for me or any other trader to say what you are using is right or wrong. We all see the market differently because we process information differently. So keep in mind as you read this missive, it is only an attempt at summarizing a rational framework to apply to an extremely irrational world, currency trading. So in other words, fellow traders, I'm not here to say that I'm right and everybody else is wrong. That's not the point. What I'm saying is that there's certain things that are myths that just are flat out myths. And I like to point them out. But if you want to believe anything when it comes to trading, so be it. My point is that if you believe in fallacy, chances are you're not going to be profitable. Now, they say that the market is a sentiment game. The currency game, boiled to its essence, is a sentiment game. It is a game driven by a crowd mentality, no different from any other actively traded asset market. Have to agree with that. If people think the market's bullish, they're going to buy. If they think, things are bad, the economy's bad, then they're going to sell. But they go ahead and they talk about these systems, okay, that we have to develop a framework to help us remain in good positions. Those based on solid rationales that have worked for us before. So he says, your system has to have the reasons for making a trade. Okay? It has to consider the risk in the trade. And also it has to consider the time frame. And this, my fellow traders, is where I believe it's a fallacy. The choice of time frames will impact your reasons and risk. Now, when you go to place a trade, you place a trade by stating your entry price, whether you're going short or long, and how many lots you want to trade, or in stock market, how many shares you want to trade. That's what you enter. Basically, price and volume. You don't enter time frame. You don't tell the market you are trading on an M1 chart or an M5 chart or an hourly chart or a weekly chart or a daily chart. That's not part of entering your trade. It's just that simple. That's a fact. So the point I'm making is that time frame doesn't make a difference. It doesn't. The daily open is the same on all time frames. The daily high is the same on all time frames. The weekly high is the same on all time frames. Once those are established, the only thing that will change them is the price. So if the price keeps making new weekly highs on all time frames, that weekly high is going to move. Like I said, I know I'm beating a dead horse, but there's just this information comes out almost daily, somebody talking about time frames. Now, this is an M1 chart, and as you can see, it has a bunch of candles. This shaded background, that's for today. See, this is the previous session. This is the current session. Now, do you see 137.13, 24 pips above the open, 20 below the current daily high, and 24 above, or 20, now 25 above the current daily low. These numbers are only going to change if the price changes, because this is telling you what the current price is in relation to the daily open, the daily high, and the daily low. Now you see, very simply, if I change to a 5-minute time frame, the data gets compressed. You see there's more data on the screen. It is compressed. It is now compressed into 5-minute candles. But it's the same data. If I go up to 15, you can see it's compressed even more. But it's the same data. Because you see here, so long as this is 137.13, the price is still 23 away from the open, 20 from the close, and or 20 from the high, and 24 above the low. You see here, we're looking at M15 data. We can change that to M30 data, and you see, once again, it's compressed. But these numbers aren't changing unless the price changes. And we'll just continue on to 1 hour. You see how the data is compressed? To 4 hours. You see, we're compressed down almost 24 hours worth of data into 6 4-hour bars. But it's still the same data. You see it? It's right there, right in front of your face. And we can take it all the way down to the day. So you can see the shading's gone because we're in the day. So this is 24 hours, or well, this day isn't, but this is 24 hours worth. This is about 22 hours worth of data. I think there's about two hours left here. In fact, what I can do to point this out is stick the TR time indicator here. Yeah, 2 hours, 1 minute, and 3 seconds left in the day. But you see here, if we go back to 1 minute, this is all today's data. It's the same data. It's the same high. It's the same low. Why people persist in spreading the myth that somehow, if you look at different time frames, it changes trades. It doesn't. It's just that on a 1 minute chart, you can't see all the data over here because we can only put any. And you can't, well, on this side of the chart, that's the future. But we can't put any more. So what do we do as traders? Using technology, we compress the data. So now we've got even more bars. We can see more data. We can see more days worth of data. In fact, if I go here down to properties, out to common, we can put on the period separators. And you can see here, this is a day's worth of data. But once again, going back to 1 minute, you see we only got 1 day. But with 5-minute chart, on the same screen space, 1, 2, 3, 4, 5. And if we go with 15, oh, we've got even more data. And if we crank it up to an hour, wow, look at that. We've got even more data. But you see, it's still the same data. 4 hours, we have even more. My point is, fellow traders, you're not trading charts. You're trading price. And for you to think that trading off a 1 minute chart is any different than trading off a daily chart, that's going to make a difference in your trade, you're wrong. What you have to do is you have to look at the data. And you have to decide how much data you want to use to make your decision. It's not the chart, it's how much data. So if you want to look at H4 data and say, okay, and you start drawing some horizontal lines at highs and calling things support or resistance or whatever other conceptual idea you want to label these things, you go right ahead. But you can say things like, well, this is the, a 50 period low or 50 period high. That's fine too, because those things won't change on charts. But you hear these people say things about the trend is my friend and follow the trend, and they look at these charts. Well, we can just stick out a little trend indicator and we can just show you once again that the trend only exists in the mind of the trader. Where is my favorite? Yeah, the Jocko trend. You see, he says that a 5-year-old would say the trend is up because of this. But let's see what happens if we switch. If we switch to an hour, a 5-year-old would say the trend is down. Now, they're both right. Because you see here from open to close, it's down. What if you go out to daily? Oh, now it's up. So the thing is, if the trend is changing based on how much data you're looking at, then once again, the trend exists only in the mind of the trader. It's just that simple. It's another one of those myths. So, fellow traders, I want you to keep this in mind. But like they said out here, if something works for you, use it. So if squigglies work for you, use them. If looking at a certain time frame chart or multiple time frame charts with squigglies work for you, use them. But just remember, there's certain things that are true, there's certain things that are concepts, and there's certain things that are false. You know, opinions, that's just an opinion. Don't let opinions be confused with facts, because the fact of the matter is that time frames is just data compression. And the other fact is it's not what you trade, it's how you trade it. So fellow traders, I hope you've enjoyed this video, and thanks again for watching. Listen, I like your comments, and I know some of you like to say that, you know what, you look forward to my posts and videos because you find them entertaining because you take me as a joke. But that's okay, that's your choice. I hope all traders are profitable, and once again, it's not what you trade, it's how you trade it.